Hello everyone, welcome to Just Invest Today, and today we're talking about the top gurus and what they bought. We're talking about the 13F filings in the top 10 stocks that they bought. This is super important because I want to do some deep dives into some companies to look at what is going on and see if we can actually find companies that are undervalued. So remember, 13F filings are always amazing to look at to find out about ideas. It doesn't mean that you clone them right away, but they're just good indicators of what like the top investors are buying, the top gurus are buying, so you can dig deeper and see if you can find these undervalued companies. Because guys, that's our main goal. Can you please like this video, subscribe to my channel? I'm going to be providing so much new content with a lot of value, so please like it, subscribe down below right now. Thank you guys so much. So this is a site called Dataroma, an amazing site. So in Q3 2021, the top 10 buys last quarter. First, Alibaba, man. So we see Charlie Munger, Greg Alexander, Monish Pabrai, Guy Spear. It's going to be really interesting. Hopefully Monish does an interview about why he sold Alibaba. But even if he sold it for tax purposes, is he even allowed to say that? I'm not even sure, because like that might be like a hindrance on like just what he does. So I'm not sure if he's even allowed to say it was for tax purposes, but it'd be very interesting. And we know Baba has been going through the ringer. People are hating, some people love it. Whatever version you have of whatever belief you have of Alibaba, it is what it is. But Baba has been getting killed. It's 133 today. And we're going to see where it goes in the next couple years, man. But I still have high faith in Alibaba. So let's see the next buy. Amazon. The next quarter, Amazon. So Valley Forge had a 10% has a 10% of his portfolio. Polling Capital Management 6%. David Tepper. So Amazon has been one of those stocks that hasn't been going anywhere the whole year. Look, it's only up 9%. So Amazon could be an interesting play, especially because they're doing a lot of reinvestment. They're doing a lot of investment into new initiatives. So this could be an interesting stock to look long term, because right now they're not growing as fast because we see what's happening with the economy and all the supply chain issues. They just missed on earnings and revenue. So they're going through a little like kind of phase, but we already know Amazon's network, its freaking brand, it's like pretty much established, set in stone, the main like dominant player in the e-commerce space. So Amazon would be an interesting buy, but the PE is already 68, so I think it's kind of too high right now. But who knows what they can do in the future, and still cloud is still going, still the most dominant part of the business. So that's Amazon, man. So let's go into Visa. Visa is an interesting one, man. It's like, what? Chris added 41%. Valley Forge still has an 8%. Chuck Aker, 7% of his portfolio. So Visa is a very interesting stock. And remember that, look at this. Since its peak, it's been down 21%. So, guys, I might do a deep dive on Visa. This Visa thing might actually provide us with a nice opportunity to buy, because people don't really believe in Visa right now. Tell me, do you guys believe in Visa? Because it's going through like a kind of a hiccup, because there's so much new players in this fintech industry. People are saying that it can honestly be penetrated, the Visa network effect and its brand. Like, do you believe that? Do you believe that's like a possibility? I can't even fathom like Visa, MasterCard going down the drain, because it's been so essential to like pretty much everyone's lives if you have any kind of credit card or anything like that. So I'm just imagining Amazon says they might not even take I think it was a Visa, because they're charging too much fees. So this is part of the huge dip in Amazon. So guys, tell me what you think about Visa. I think I might do a deep dive on Visa, man, next on Visa, just to see if the moat is stable, because that's our main concern. Is the moat stable? Is it still going to generate high growth for us going into the future? That's our main prospect, and that's what we really want to know. Book holdings, man. So this guy added 57%. Eco Capital, Bill has us still 3%, reduced, added, Richard added 21%. But Book Holdings is an interesting play. We see that the whole new pandemic is starting up. They said there's a new strand. So this might go through some kind of readjustments, some probably downfall. Yeah, see, Book Holdings took a look at that, a 18% dip from all the news about this new virus. So this might be an interesting new play, but I don't know because traveling stocks I kind of want to stay away because I feel like it is gonna recover, but it's just so here and there and so like uncertain. And Book Holdings, because you remember Book Holdings is they basically like get you to like book here and they get you to like bookings over here. They get your traveling situated, all situated. So that's basically what they do. And I just don't know about like the airlines right now and how profitable they're gonna be in the future. So I might just pass on Book Holdings. And when I checked them, they did have a lot of debt, so I was kind of like pushed off about that. But that might be something we should go into. Tell me what you think about Book Holdings. If you actually own it, if you don't, tell me what you think about Book Holdings. FedEx is the next up. I just want to skip FedEx, but FedEx would be interesting. But I'm just thinking about there's gonna be so many new players. Like Amazon's pretty much taking over that the whole logistics kind of space, and FedEx has such a corporate culture and pensions and just the whole FedEx industry is just so here and there, and it all depends on the macroeconomic effects of if people are ordering more. But I do believe people will order more, but still I just not like have a solid brand. Like you can go to any brand that delivers like products. So FedEx is not really something I'm looking into. We understand Google. Google has an amazing moat, amazing company, everything's solid. If Google actually dips like heavy, I'm gonna buy into Google because Google, I missed it. I was so pissed, man. I can't believe I still missed it during the whole pandemic, man. It was 1,400, and I was just like, I don't really want it. I was waiting for 1,200, and that's the problem with just always trying to look for a perfect margin of safety. Like the margin of safety is just in the company. Google is such a strong company, so dominant. The margin of safety is just buying that company, man. And I just missed it because I was so caught up on price, man. And it's a wreck. Like, what is it around? Like two. Let me check what Google is at. Look at that. Google has had 65% run. Holy man. And I remember where I could have got it. I swear to you. I could have got it at 1,400, but I said, oh, that's too much. That's too much. I wanted it at like 120, 1,200. And I just fully missed it because of being an idiot and just not doing it because I thought $200 more was just too much. And that's my new thinking. My new thinking going on is going to be just the margin of safety is literally in the company and how strong the growth is. PVH Corp. I have no clue what PVH Corp is, but it's American clothing company. Calvin Klein, Olga and True. I'm probably gonna miss this. I'm not a big fan of clothing companies unless it's like Louis Vuitton, Fendi, those big brands, because those big brands doesn't even matter what market we're in, ups and downs. It's luxury. It's always gonna be in style. It just never like something about the Louis Vuitton logo and brand. It just never it's gonna die. Calvin Klein and all those other companies are kind of up and down, and fashion is always going through different trends. So I don't trust fashion, right? So let's look at the next stock. The last one I really want to look at is Activision Blizzard, which is really interesting, man. So we added what, 15% a new buy, added 1,000%, 9% new buy. But Activision has been going through ups and downs recently. Look at this. Through their peak, 103, 40% drop, $60. And we know Activision has such amazing brand. Like the Activision brand and the basically the products that they own is just amazing. Like look at Activision's games. They have World of Warcraft, Call of Duty, Candy Crush, Diablo just came out, a new one, Overwatch. Like their franchise is just amazing. So we already know that, but they've been having a lot of trouble with their brand and the culture. So people don't really believe in the culture right now when it comes to Activision. So I am not too sure about if I'm gonna invest in it because culture kind of means everything, and they're trying to get the CEO out of there. So Activision is an interesting one, but I probably am gonna pass on it because culture is everything when it comes to holding stocks for a very, very long time. Because we're trying to hold stocks for 5 to 10 years, and culture means a lot. So the companies I really want to look into probably is Visa and maybe Visa right now. I think Visa is the strongest one to look at. Tell me what you guys think. You guys want me to look at a different company, maybe FedEx, Google, PVH, Activision, Wells Fargo, Amazon? Like, what are you guys thinking? Like, leave a comment down below. Is there any stocks I should look at? I'm thinking about also PayPal. I'm gonna do a video on Visa and PayPal and see what's going on, what's a better buy, if we should just do a deep dive in these companies. So guys, please like this video, subscribe to my channel, and I'll get back to you in the next video. Peace.